Hi everyone, hope you're doing well. Today we're going to talk about a crazy move in one of the UK stocks that I own today, and then we'll talk about the GDP growth from the UK as well, and a few other things that have happened in the last 24 hours, so hopefully it's useful for you guys. I will be doing a full review of Card Factory's earnings as well on the Patreon as well, probably in the next 24 hours, so if you do want to see that, links in the description for the Patreon, guys. It is, if you click become a member, make sure you don't do it on the iPhone because iOS charge a 30% fee on top. If you do join, it's £6 a month. If you do pay yearly or annually, it is £5.10p a month, which is not too bad at all considering you get 2 exclusive videos a week, a Discord with 600 members on to talk about stocks, including me, and you get to see what I'm doing in real time in the stock market, buying and selling. Just to let you know, at the end of the year, the prices are going up as well, guys. It's to reflect another outstanding year on the stock market. I think, with the returns that we have as well, I think it's justified now that the prices do go up to reflect the performance a little bit. So I will make you aware of that. But today, what we're going to do is we're going to start off with Card Factory. I'll give my brief earnings on the video today, and then, like I said, I'll do a bit of a deeper dive into what has happened with Card Factory in their earnings a little bit later on in the Patreon. But yeah, just my quick overall thoughts with Card Factory. Not gone through the full earnings yet, just looked at the headline numbers so far. But what a strange move. What a strange move. The stock was up 8% at the open, and then it gave it all back, and it didn't even pick some of the jump up, actually, to be fair, on the stock chart. So really, really strange move from Card Factory. No idea what's gone on there for the big swing in the share price. You're talking nearly a 13% swing on the day, which is a pretty decent size move for Card Factory. We did the video yesterday. And my video yesterday basically went into like what will happen more than likely with Card Factory, and pretty much it was bang on. The interim results came out. We knew they were going to be a little bit H2 weighted. That was clear in the results. And how was the market going to react to that? And the market originally reacted quite positively to it. And I was like, okay. And then it sold it off. So I'm thinking the market once again is getting a bit like, whoa, can they hit the full year guide when the H1 weighting looks like that? But we knew it was going to happen. Card Factory said it last year. The market threw its toys out the pram. And it looks like it's doing it slightly a little bit today, but not to the same levels as last year. So it is what it is at the moment. What I will say is, though, this is why I did take a little bit of profit off the table. So when I did the 5 UK stocks I'm buying, and also that's the benefit of the Patreon as well, you'll see that I actually identified that, look, it's been on a good run. Card Factory had been in the last kind of couple of months having a bit of a bounce up, as you can see here. And last week I just went, you know what, if it freaks out with the interim results, I'm just going to protect myself a little bit, and that's what I've done. And it's had a little bit of a pullback, and that's why I did that exact thing there. Looking at the numbers, I actually thought they were okay, to be fair. Like, revenue was 5.9% growth, and that's without like the likes of the acquisitions that they've been making. EBITDA, which is probably one of the better numbers to using at the moment. I know EBITDA's, everyone's not really a big fan of EBITDA, but for this one, maybe there's cases that, yeah, EBITDA is a good number to be using. That was only down 2.5%, so that's not too bad at all, considering the H2 weighting was going to be significantly weighted, even more than last year. If you look at adjusted EPS, that was down 0.03p, and adjusted profit before tax was actually down 9%, so not terrible there. The thing that you've got to remember is that when you look at the basic EPS, you're looking at that and it's going 46% down. Whoa, what is going on there? But you've got to remember there's a lot of one-time impacts because of the acquisitions that they've been making, and also because of the FX impacts that have been going on at the moment as well. So when you take the one-time costs out, if you look at those numbers, you're like, whoa, that's awful, but you got to put the one-time costs in. And what's probably even more impressive is that they actually had, you can see it, more than 20 million of financial year 26 cost inflation. That's significant, because if you look at the profit that they actually generated, where we've got here, profit before tax, obviously let's just take the one-time charges out. Let's just go to last year's numbers. Let's say 14 million. The cost inflation from this year is higher than the full amount of profit before tax they made in the whole of last year. That's incredible, cost inflations to be having to deal with right now. So the fact that they could maybe, well, it looks like we'll see if they do it in the full year guide, but they're trying to balance it out. Obviously, that's pretty good going. You look at what they've had to deal with at the moment. You've had the significant increase in the national wage. So you had wage increases that were 3 times inflation. That's quite tricky to manage. You've also had the big increases of the national insurance costs at the moment, which is obviously a big impact for businesses, especially someone like Card Factory. And then obviously inflation's gone sky high again. So you've had 3 major cost pressures from labour that they've had to deal with. And at the moment, they're battling away and then doing what looks like a pretty good job. So when you put into context like that, it looks pretty good. So from what I can see at the moment, I'm actually okay with the numbers. Like I said, I've not read the full earnings and I've not listened to the webcast. So when I've listened to the full earnings, read through the full earnings, listened to the webcast, I'll give my updated thoughts on the Patreon tonight on everything and give you a bit more of a nerdy view. So for you guys that are a little bit more of serious investors, that'll be a good one for you guys and we'll get a bit more stuck into it and a bit more thoughts there a little bit later on. PayPal had a pretty good day yesterday. Had a slight little drop and then it started to recover again. No idea why, what's going on with PayPal and why it's having a little bit of a bounce at the moment. But, I'm trying to, I've recently started buying back into PayPal, so I'm hoping it doesn't go too crazy too soon before I build the position out. I've already built out a pretty decent position, but I probably want it a little bit bigger. I'm waiting for the Q3 earnings now just to see what they say and if everything's financially moving up in the right direction. If they are hitting towards 5% revenue growth, and they are currently sitting at what is at the moment 11 times forward earnings, I'll be really happy with that. So I just want to make sure they're doing it. And then obviously I want to see the guide and hopefully once again the guide in for the next quarter, another 5% year over year revenue growth. And then if they start pushing on to 6% growth, we'll see what happens. Yeah, I think 11 times earnings for that sort of growth and the quality of PayPal with the profit margins would be pretty good. So maybe a few people are just getting excited before Q3. We'll see what happens. Another stock that had a good day yesterday was Shopify. What happened is it was the OpenAI is going to be launching an e-commerce platform and Shopify may benefit from that. I don't know if that's why PayPal took, I don't know. But yeah, Shopify, had a pretty good jump on that one at the moment. And what a performance this has been. This was $26 in September 2022 and is now up 453% since that time frame. My average isn't as good as that because I had a few shares. I built a bit of position during like 2020 into 2021 and then I averaged down a little bit. So it's still been a really good performer for us in this time. Proves once again, you don't always have to exactly catch the bottom to make good money on it. But obviously if you do get, really near the bottom, obviously it does look pretty good when you do get those returns in. But yeah, I mean, Shopify, the numbers they've been bringing out have been exceptional. Probably the best numbers I've seen Shopify do for, many years. The fact that this is where it gets really exciting for businesses because what's happened with Shopify is like they've re-accelerated in the growth. And as soon as you mention that word re-acceleration in growth, you see a lot of metric expansion going on. That's why Hims and Hers went crazy because it had all that acceleration from like the likes of the GLP-1 and hopefully with PayPal, if their growth starts ticking up, it's something that might happen with PayPal. The other thing with Shopify now is that I do look and I think, 77 times earnings. It's not too bad, I guess, for a company of PayPal's, Shopify's. I keep saying PayPal when I mean Shopify. For Shopify's quality, it's not too bad. 18 times to sales. Yeah, it's okay. It's okay. It's definitely not cheap anymore, is what I'll say at the moment. You might hear a lot of mention about potential US government shutdown at the moment. That's in the media a lot. Yes, whenever this, I think I've been in the stock market and we've gone through this multiple times. Personally, for me, it's not something that I particularly worry about and nothing that has a major impact, but you might see it mentioned a little bit in the headlines a little bit over the next couple of days. What is getting mentioned a little bit today is the UK economy. The GDP growth figures came out and I thought they were like, they weren't great. They weren't as good as what I thought they were going to be. I thought with what, how it's been in the UK at the moment, the weather and everything like that, everyone will be on a happy note out there spending, and it weren't really the case. It kind of came in line, and probably the most concerning thing is when you look at July, which was an absolute cracking month, and it actually flatlined in July, which is not good. And as I always say, when you look at the trend at the moment hasn't been good for the UK. The trend is going downwards and the trend is your friend. Well, in this case, it's not your friend because it's declining and it's a major issue right now. The economy is really starting to struggle in the UK and it's not moving in the right direction. And even when it has the benefits of everything lining up in the right direction, it seems to be going really wrong as well. And it just leaves you in an awful place because and you think, well, at least the UK now has certainty in the direction it's going, so maybe things rebound. But right now you have the UK economy slumping down, and the problem is that what you know is going to happen, or what you don't know that's going to happen, is we have an absolute crazy late budget coming up in the 26th of November. So this uncertainty is, rather than getting it dealt with and going, look, we know we've got tax hikes coming because they're going to have to raise taxes. Well, let's just get it out of the way so that at least the economy and the market knows what they've got to deal with. And yet they've left it to a month before Christmas just to make it even more uncertain, and uncertain in a time where it's the Christmas period as well. I mean, it's just schoolboy error after schoolboy error back with this government, isn't it, at the moment? And the fact that, I don't know if you saw the Labour conference the other day, but basically, they've always said, oh, we're not going to raise the three main taxes. And I don't know if you've noticed the tone in the last couple of weeks, but it's kind of gone, well, we're not going to hike up VAT. So it's like, well, hold on. So does that mean you're hiking up NI, or does that mean you're going to hike up the income tax? Because one of them's going up now, because the change in tone seems like it. They're going to, to plug a 50 billion black hole, you've got to increase one of your major taxes. You can't come for investors again. They went for investors in the last one. If they go for investors again, that is, I'll tell you, that's the end of me living in the UK. I'll tell you that. So we'll see what happens from that point of view, but yeah, it's not good. And you topped up the thing as well, is when you look at this July data and it's flatlining, and during that time frame, inflation's gone from 1% and it's gone up to 4%. Like, that's that's even worse. That's even worse, because now you have the economy flatlining in a period where inflation's going up 4%. That's even worse when you've got growth that's that far from inflation. You're actually falling quite significantly behind. Yeah, it's just awful. And another prime example, really, with what we were talking about today with Card Factory a little bit earlier on in the video. And Card Factory had to deal with 20 million of cost inflation, which was all being caused by the current government. And you look at this 20 million. For Card Factory, they've done well to deal with it, but there's going to be other businesses that don't do well to deal with this situation. And this is the problem: is that this is what happens when you get socialist governments in power. It just doesn't work. You just look through so many countries in the world, and nowhere has socialism worked. And you look here, and there's 20 million that they've had to deal with cost inflation and wage increases, national insurance, and the inflationary pressures that are being slapped on them. Imagine that Card Factory made 20 extra million this year, and they didn't have on H1 alone, right? Let's do lazy maths, and let's say they made 40 extra million through the financial year. Imagine if they made 40 million in profit this year, right? Because they didn't do these crazy inflation increases, these crazy national wage increases, and national insurance, right? 40 million a year, right? So you're going to have businesses doing well. Businesses do well, economic outlook looks a lot better, okay? With that 40 million extra, they can go do wage increases to the people that work there. Everyone feels a lot better if that's the case. Okay. The other thing is then you're paying dividends. So people that are investing in the company are wealthier, and those people that have a little bit more wealth, them going out to spend makes a big, massive difference into the economy. Those big wealthy investors buying the luxury goods, that makes a big difference. Once again, that trickles down into the rest of the economy as well, because they've had a good year, dividends, share prices doing really well. Okay. The other thing is then the government has 40 extra million to tax in profit. So they make 8 million in profit in tax from this environment here. So this 20 million cost pressures here, some of that is inflationary cost pressures as well, to be fair, but this extra 8 million as well. And then obviously if they increase the wages, it probably even more than that from the tax that they make from people's wages. You're growing look at all the people are going to benefit from that, rather than doing these costing pressures where everyone gets this negative tone. It's basics 101 on how to run an economy, but obviously we lack that at the moment with what's in power. So yeah, that's obviously not great news again, really, from the UK, to see the trend really moving in the wrong direction. And I just can't believe they're leaving, so much uncertainty for the next kind of couple of months, really, to dwell on it. That makes it even worse. But yeah, that's it for today anyway, guys. That's my thoughts on Card Factory. Bit of talk about PayPal, Shopify, the US shut down. Also, some GDP growth out there as well with the UK that doesn't look good. And apart from that, I hope you enjoyed it. Like I said, if you're on the Patreon, I'll try to do a bit more of a nerdy, deeper dive, digging into all the details, all the nitty-gritty stuff on the Patreon for you guys. Hopefully tonight or either tomorrow. But apart from that, I hope you enjoyed it, guys. Thanks for watching. See you in a bit.